Welcome back to the channel. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. Today we're examining a strategy called Vwap deviation reversion. It's a mean reversion approach built around VWAP, the volume-weighted average price that large institutions watch closely, combined with deviation bands, the RSI momentum gauge, and the ATR volatility measure. By the end of this video, you'll understand exactly how it reads the market when it signals an entry and how it manages its exits. Remember, this is educational information only and not financial advice. Let's get into it. So what exactly does Vwap deviation reversion do? At its heart, this is a mean reversion strategy. That means it doesn't chase trends. Instead, it watches for moments when price has stretched unusually far away from a central reference point, and it positions for a possible move back toward that center. The center it uses is VWAP, the volume-weighted average price. VWAP is one of the most widely followed reference lines in professional day trading because large desks measure the quality of their fills against it. Price has a tendency to be pulled back toward VWAP, so when it drifts too far, the strategy studies the conditions for a snap back. Because the engine runs on a single symbol and time frame, the EA builds a rolling VWAP over the last 30 bars by default, weighting each bar's typical price by its volume. Around that VWAP, it constructs deviation bands using the volume-weighted standard deviation of price. The upper and lower bands sit a chosen number of standard deviations away, and they automatically widen when volatility rises and tighten when the market calms down. But the strategy does not simply fade every touch of a band, because a market can keep pushing in one direction. It waits for 3 separate conditions to line up on a freshly closed bar before it acts. It combines the band stretch with the RSI momentum gauge and with the shape of the candle itself. This approach is designed for the educational study of intraday, range-aware trading on liquid instruments, such as a major foreign exchange pair or a stock index, typically on the 5-minute to 15-minute charts. It suits a trader who wants to understand systematic, rules-based mean reversion rather than discretionary guesswork. As always, trading carries real risk, and losses are a normal part of any strategy. Let's walk through the exact rules the EA follows. The strategy only evaluates the market once per newly closed bar, so it ignores the noise inside a forming candle and acts on confirmed information. Before it considers anything, it checks 2 housekeeping filters. First, it allows only one open position per magic number at a time, so the structural stop and the mean target manage each trade to completion without stacking new orders on top. Second, it skips new entries whenever the current spread is wider than the maximum spread setting, which by default is 80 points, to avoid entering when trading costs are elevated. Now the core logic. On each closed bar, the EA calculates the rolling VWAP, the volume-weighted standard deviation, and from those the upper and lower deviation bands. It also reads the RSI value and the ATR value for that bar. For a long or buy setup, 3 things must align. The bar must close below the lower band, meaning price has overstretched to the downside. The RSI must be below the oversold level, which defaults to 35, suggesting that downside momentum is exhausted. And the bar itself must be bullish, meaning it closes above its open, which is the first hint that price is starting to turn back up. When all 3 agree, the EA places a buy. Its take profit is set at VWAP, the mean it expects price to return to, and its stop loss is placed 1 ATR multiple below the entry. For a short or sell setup, the mirror image applies. The bar must close above the upper band. The RSI must be above the overbought level, which defaults to 65, and the bar must be bearish, closing below its open. The EA then places a sell, again targeting VWAP, with its stop loss 1 ATR multiple above the entry. There's one more filter worth noting. Before committing, the EA measures the distance from the entry to the VWAP target against the distance to the stop. If that reward to risk ratio falls below the minimum setting, the setup is rejected as not worth the risk. This keeps the strategy selective and disciplined, and it means that when price has already drifted close to VWAP, the EA simply stands aside. Let's look at how this is written in MQL5, the language the expert advisor actually runs in MetaTrader 5. At the top, you can see the input parameters. VwapPeriod sets the rolling window of bars used for the VWAP and its bands, defaulting to 30. BandMult controls how wide the deviation bands sit, as a multiple of the volume-weighted standard deviation, defaulting to 2. RSI period, RSI oversold, and RSI overbought define the momentum filter. ATR period and AtrStopMult control the volatility-based stop distance. And min-reward risk is the minimum reward to risk filter we just discussed. Now look at the long block. The condition reads, if the close bar's close is below the lower band, and RSI is below the oversold level, and the bar is bullish, then prepare a buy. The entry uses the current ask price. The take profit is assigned the VWAP value directly, because the mean is the target. The stop loss is the entry minus the stop distance, which is 1 ATR multiplied by the stop multiple. The code then confirms the reward divided by the risk meets the minimum before calling trade up by with the volume, the stop, and the take profit. The short block is the exact mirror. If the close is above the upper band, RSI is above the overbought level, and the bar is bearish, the EA prepares a sell using the bid price. The take profit is again VWAP, and the stop loss is the entry plus the stop distance, 1 ATR above. Once the reward to risk check passes, it calls trade.sell with the same structure. Notice how both sides are symmetrical, and how VWAP serves as the take profit on both the long and the short. Let's bring the whole strategy to life on a chart. What you're looking at is an illustration on a major foreign exchange pair. The blue line running through the middle is our rolling VWAP, the volume-weighted average price. The two gray lines above and below it are the deviation bands, set a couple of standard deviations away from VWAP. And in the panel below price, the gold line is the RSI, with the oversold zone shaded green near the bottom and the overbought zone shaded red near the top. Watch how the story begins. In the first few candles, price is trading just under VWAP and then starts to slide. With each bar it pushes lower, and you can see the RSI line falling with it, sinking toward and then into the green oversold zone. By the third and fourth candles, price has stretched all the way down and actually closed below the lower deviation band. This is the overextension the strategy is built to study. Price is far from its mean, and momentum, as measured by RSI, looks exhausted. Now look closely at the fourth candle. It closes below the lower band. The RSI is sitting below the oversold level of 35, and crucially this candle is bullish, closing above where it opened. That is the first sign of the snapback. All three conditions agree, so the buy entry is signaled here, marked on the chart. The EA also checks that the distance up to VWAP is large enough relative to the stop, and it is, so the trade is accepted. The take profit is placed not at some arbitrary distance, but right at VWAP, the mean price is expected to return to. The stop loss sits 1 ATR below the entry, giving the trade room to breathe. Follow the next two candles. Price lifts off the lower band and climbs steadily back toward the center. By the sixth candle it reaches VWAP, and the take profit is met. That is the complete mean reversion idea in action. Study the stretch, wait for confirmation, and target the mean. Now the chart sets up the opposite case. After tagging VWAP, price keeps pushing higher. Candle by candle it rises, and the RSI climbs with it, moving up through the middle and into the red overbought zone near the top. By the 9th and 10th candles, price has stretched above the upper deviation band. Once again it has traveled too far from its mean, but this time to the upside. Look at the 10th candle. It closes above the upper band. The RSI is above the overbought level of 65, and this candle is bearish, closing below its open, the first sign of price rolling over. All three short conditions are satisfied, so the sell entry is signaled here. The take profit is set back at VWAP, and the stop loss sits 1 ATR above the entry. Watch the final candles. Price eases off the upper band and drifts back down toward the center. By the 12th candle it returns to VWAP, and the take profit on the short is met. You've now seen both halves of the strategy, a long from the lower band back to the mean, and a short from the upper band back to the mean. In every case VWAP is the destination, the bands define the stretch, RSI gauges exhaustion, and ATR defines the risk. Of course, Not every setup behaves this cleanly in live markets. Sometimes price keeps trending instead of reverting, the stop is reached, and a loss is recorded. That is a normal and expected part of any trading approach. And that brings us to the end of our breakdown of Vwap deviation reversion. We covered how it builds a rolling VwAP and deviation bands, how it combines an overstretched band close with RSI exhaustion and candle confirmation to signal a fade, and how it targets the mean while protecting each trade with an ATR-based stop. Everything we discussed today is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to break down next, and subscribe so you don't miss what's coming. You can find more strategy analyses over at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.